All right. What's going on, team? It's Ricky with Learn Plan Profit. Hope that you guys are all having an amazing start to your morning. Today, it is Wednesday, May 10th, 5:16 in the morning. And today we have the CPI data report. So CPI data report will be released in just a few minutes, I believe 14 minutes to be exact. Wanted to go live a little bit early, answer any last minute questions. I'm going to be showing you again the website where this all gets released is bls.gov/CPI. I want to remind you that when this report comes out, there's an instant reaction, right? You're against bots. And at that point, the reaction is going to be much quicker than someone like you and I can react to. So there's going to be an instant reaction depending on if inflation comes above or below what the market is expecting or forecasting. So again, it's not about predicting the future, especially when you're just getting into this and being a complete beginner. One of the things that I want to encourage you, right, if it's not too much to ask, is sit back, relax, watch the market react. Either it's going to be a sudden drop or a big pop off, right? And it's all going to be based off of what we've expected versus what was actually reported. So for those that are unaware of what the heck is a CPI data report, it's literally super simple. So first off, bls.gov/CPI is the website where this is all available. Once you click on the little PDF section, this provides you the sheet and it breaks down for you for the past 12 months if inflation has been going up or down. And again, even before I actually start breaking this down, I just want to make sure you guys can all see me and hear me okay within this live stream. If you can, please let me know in the live chat. So if you're watching this live and you want to partake in that live chat, you do have to be subscribed to the YouTube channel. And it's free to subscribe. Again, I really hope that I earn your thumbs up. Thank you for waking up early with me. Again, it's 5:18 in the morning. I'm happy to do this for you guys. You guys absolutely killed it in our video yesterday. You guys got it to 1.3K likes. I really do appreciate that. And I want to be here for you guys. So let's go ahead and do it so I can hear you from Hawaii. Dang, if I thought it was early here, what time is it over there? 2 o'clock? Papi Kava? 2 o'clock over there, no? Right? It's a 3-hour time change? That is wild. Where are you guys joining us from? India? Holy smokes. What's going on, Luis? What's up? Florida. I don't feel so bad in Florida. Florida, you guys are 3 hours ahead. It's 8 o'clock over there, is it not? You got your beauty sleep. Florida, baby. Canada here. Portugal, Cairo. Money don't sleep. I like it. Texas, Zimbabwe, South Africa, Poland, Virginia Beach, Colorado. Damn. Pennsylvania. Okay. As you guys can see, again, this is a very exciting time. This happens once a month. It's a CPI data report, and I'm really excited to break it all down for you guys. So thank you again for just tuning on in to my live stream. I'm happy to experience this with you guys, and I really hope that you at least learned something new, and hopes that, again, if you ever have any questions, you're more than encouraged to send me a direct message via Discord or via Instagram, which is all linked down below. So let's go ahead and just jump right into it. So one of the first things that I want to say is that during the CPI data report, what we are looking for is for inflation to go down through the eyes of the Federal Reserve. And what we mean by that is inflation is currently at 3.5%. As you can see, we've been seeing a steady drop. We currently sit at 3.5%. The stock market would thrive if inflation comes in lower, because if inflation is coming in lower, that means that inflation is not going up, and that the Federal Reserve doesn't have to worry about raising interest rates anymore. They can focus on cutting interest rates. I don't know if you guys have heard of it, but they've been wanting to cut interest rates since late 2023 and early 2024. But because inflation has not been going down, they haven't been able to justify it. So this is the why. This is why the Federal Reserve wants inflation to continue to go down, so they can justify their rate cuts. And when they cut interest rates, that's going to make it more affordable for people like you and I and businesses to borrow money. So the way that this is all calculated, the new one that's about to be released in about 9 minutes, again, it's very, very simple. They have 12 months here. Well, they actually have 13 months because they're including March 2023. So what they're going to be doing here is, do you see this month of April? This is actually the part that I messed up on yesterday, and I'm just realizing that now. So they're going to be reporting for the month of April, and the month of April is a 0.4% increase. That's a huge jump, right? This is going to be taken away from the formula in the way that the CPI data report is calculated. So the way that the CPI data is calculated of the 3.5% inflation, it's based off of the last 12 months. But when you add the new month of April for 2024, and you remove the old month of April of 2023, again, just think about it as little pieces of a pie. This is a pretty big piece of the pie because this is a 0.4% increase. So we're taking that away. So therefore, even in the month of April of 2024, if we see that inflation didn't jump up more than 0.4 or 0.5%, then we're only going to see a slight increase. So I think this is why the market's forecast, so if you look at the market's expectation, they expect inflation to go down 3.4%. So I'm guessing that they probably expect inflation to come in at they probably expect inflation to jump in the month of April only 0.3 or 0.2% because of we're removing 0.4%, but then only adding a much smaller piece of the pie. So therefore, technically, with the way that the CPI data report is calculated, they should see the CPI data report drop. And then they're going to have these line items. And I'm going to break this all down for you guys. So once the new report comes out, there's going to be this new month of April added here. So you see how it goes January, February, March, and then they're going to have April. And April is going to be here, and then it's going to have all of its line items. And it's going to tell us if food at home, food away from home has gone up or down in the month of April. Very simple, right? And then as you can see, all items. So this is all items. This is the blue line. The 3.5% that we were talking about is right here. And then there's this kind of like maroon or burgundy line. And then this one sits at 3.8%. So our current core inflation is 3.8. And the way that core inflation is calculated is all items less food and energy. Why do they calculate it that way? Well, the Federal Reserve, based off of monetary policy, let's not overcomplicate it. The Federal Reserve cannot influence the price of food and energy, right? So because they can't influence it, it's not included in core inflation. So there's core inflation. It's pretty much just to make the Federal Reserve feel better. I would say that's, in my opinion, that's just the best way to put it. They only calculate all CPI and then core CPI because, in my opinion, like, why would you not include food and energy? They don't include food and energy because, again, those are the two that did see the biggest jumps when inflation was going up, and it's just a way for the Federal Reserve to not feel as bad of how inflation is currently sitting. So, and they can't influence food and energy prices. So it might sound a little complicated. I'm telling you, it's not. It's going to be very, very simple. In the next 5 minutes, this report will be released. The new month of April is going to be added. The old month of April is going to be taken away, and then they're going to readjust, right? They're going to tell us what the new inflation rate is. So from 3.5, what is it going to be after we take away 0.4 and add whatever is reported for the month of April? And then we're going to go through the line items and see what saw the biggest jump and what saw the biggest drop for the month of April. Make sense? Simple, right? So again, please, I can't stress this enough. Do not take a position if you cannot tolerate worst case scenario, right? There's a lot of people that love to watch the CPI data report, but they don't trade the CPI data report. I'm just reminding you and making you aware. My focus is never here to tell you what to do, to tell you where to buy or where to sell a stock. My job is just to make you aware of the risk involved. Everyone likes to focus on how much money you could potentially make. I want to focus on encouraging you to keep it, right? And taking into consideration the risk involved behind every trade. I know it sounds boring, but again, I mean, there's a reason. And again, we can ask how many of our LPP students are here. There's a reason I go live with them every morning, and that we talk so much about risk management, because a big part of trading, yes, it's making money, but a much larger part of trading is actually keeping it. And that's where position size management and, managing risk comes into play. So again, just want to make sure that you're aware of that. So we have 4 minutes left, 4 minutes until the CPI data report is released. Right now, we are looking at QQQ, which is the NASDAQ 1-for-1 ETF. So if it goes up, then, if the NASDAQ reacts, if the overall market reacts in a positive way, then so will QQQ. And I want to see if, I'm just going to wait for the report to come out. Let's see. I have SQQQ here, which is the inverse ETF. I wouldn't mind taking a small trade. I'm going to do 1,000 shares. Again, please do not copy me. I can't even stress that enough. This is why I only like to trade in front of my LPP team, because they know that, when I say that, I mean it. Do not take a trade if you cannot tolerate worst case scenarios. So I'm going to buy 1,000 shares, which is about $10,000 of SQQQ. SQQQ goes up when the NASDAQ market goes down. I think that the market's going to go down. I've been wrong many times. But again, it doesn't matter. If NASDAQ market ends up going up, then this thing's going to go down. Even if it loses 5% of $10,000, I would lose about $500. I can tolerate that, no question. So again, put yourself in a position to succeed. Do you guys remember my day yesterday with AMC? I made $18,000 shorting and going long on AMC. And did you guys hear what got announced today? AMC, and they've done this in the past before. I just shared it on my Instagram, and I shared it with my LPP team. So AMC uses the stock price surge to erase some debt. So I don't know if you guys have been aware of this, but pretty much they swapped nearly 23.3 million shares of around $163 million, or 10%, right? 10% to pay off some of the liens and notes that were due in 2026. They are taking advantage of this higher price because they know that this is not going to last. So they took advantage of these higher prices to look out for themselves. And think about it. All these Reddit traders, all these people that try to encourage you to hold the line. You can say whatever it is that you want. I'm always here to encourage you for you to look out for your own self. I really hope that you understand that even this company, the company that is experiencing a huge surge, is taking advantage of this surge to lock in profits, to reduce their debt by selling some of their shares to pay off their debt. And if this company is doing it, then why wouldn't you? That just baffles me. But nonetheless, again, in just the next few seconds, we're going to see the CPI data report be released, and let's see the market react. Okay? So hopefully I earn your thumbs up, and without further ado, let's wait for the market to react. It should be any second now. It's 5:29. In the next few seconds, it should be released, and we'll update it. So here it goes. And I want to remind you that once the report is released, there's an instant reaction, and that instant reaction tends to be one of the most dramatic ones. This is why it's one of my favorite times to trade. So here it goes, 529. Is inflation going to go up, or is it going to go down? It looks like it's actually going up. And look at that. Big push. Let me pop it up here. Look at that big drop. Again, the cheap can always get cheaper. No question about that. Here it goes, still pushing. Let it rip. This inflation report had to come in below 3.5% for sure. There it goes. I just bought 1,000 shares of SQQQ. So QQQ with a really nice push. Let's see if this is an overreaction. So let's see what the CPI data report came in at. So for the month of April, we saw a 0.3% increase, right? Just like we talked about, a 0.3 or 0.2% increase. And we removed the old month. So we removed the old month of 0.4% increase. We add the new month of 0.3%. This brings our overall inflation rate to 3.4%. This is exactly what the market expected. So it's actually not lower. It's actually just where the market expected it. So there it goes, 3.4%. That was what was forecasted. That was what just was reported. And this is why the market is reacting the way that it is. All right. So it's only down 1.8%, 1.9%. It could go down even more. anytime something like this happens, I like taking advantage of once it stops running. So once QQQ stops running, I would love to take advantage of the opportunity, but we're just not there yet. Let's see. Doing another 1,000 shares, which is about $10,000. Just giving you a heads up, making you aware. Okay. 3.4%. Do you guys want me to, and again, I'm not shorting. I'm trading one of the inverse ETFs, which is pretty much like shorting, but without having to borrow shares to short. So I think that what the market is currently experiencing is an overreaction. Market is completely skyrocketing. Not completely. I mean, it's up 0.7%, so not even 1%. But it's gapping up because inflation came in as expected. But that was already forecasted. That was already factored in. So I think that this is just an overreaction. We're going to see a slight correction, and then I can make money off of that slight correction. Again, that's still just an assumption. It's not something that actually has to pan out exactly according to plan. So here it goes. Again, going to try to buy another 1,000 shares. So 1,000 shares, another $10,000, making you aware. Okay. Okay. Did retail sales get reported already? Let's go ahead and bring it up. So we do have a trading tool that's available on our site of techbudsolutions.com, and it's just the economic calendar. So there were a handful of reports that were supposed to be released today, and we could see, yeah, I mean, it came in lower than what was expected for sure. I wouldn't see that to be super bullish. Core CPI had an expectation of 3.6%, and that's exactly what was reported. All items less food and energy, 3.6%. Can you guys see my screen okay? For those that are watching live right now. So about to pay off $8K in debt because of you. Thanks, man. That's all you, George. It's definitely not me, right? I didn't take the trade. You took it. So happy to see that you're locking in profits. And obviously, if you want to pay off some debt, then let's happy to see you do it. So SQQQ, again, on the oversold side, as NASDAQ market continues to run, yes, this thing could go higher for longer, and we have to be aware of that. I want to remind you the report came in as expected, so wanted to break this down for you guys very quickly. So I am going to be paying attention to QQQ on my secondary screen, so please, again, you look out for yourself if you have any open trade. I'm just going to take one more trade on SQQQ before I move on, and then I'm going to break down that CPI data report for you, okay? We'll keep it short, we'll keep it sweet, and we'll make sure that I want to make sure that you have a full understanding of why the market is reacting the way that it is. Okay, so our previous inflation rate for our previous CPI data report showed that inflation was at 3.5%. That was our rate of inflation. We are now at 3.4%, so we saw a 0.1% drop. Remember, we just added the new month of April. This is what you see here, April 2024. And we just took away the old one, April 2023. So we removed 0.4% of an increase, and we added 0.3% of an increase. So you could see why it dropped. And there's an exact formula. So it's not just that we added 0.3 and we added 0.4 and it's an even exchange. And obviously we added less than what we took away. So that's why it dropped. I mean, it did drop because we added less, but there's an exact formula on how it's calculated. And it's not just adding all of these up. So I just want to make sure that you're aware of that. If you want to look up the formula, be my guest. I don't personally look it up. Because it almost doesn't even matter, because the way that it's calculated and the way that the market reacts, it reacts instantly. So overall inflation, when someone asks you that question, hey, do you know what the inflation rate right now is? According to the CPI data report, you can say, yeah, it's 3.4% based off of the reporting for the month of April. But core inflation is at 3.8%. So again, what exactly does this mean? Well, this shows that overall inflation, right here, went from 3.5 to 3.4. So we are actually dropping according to the month of April. And also core CPI went from 3.8 to 3.6%. So if we zoom on in, and I'm going to zoom on in here, you're going to be asking, someone can ask you the question, okay, well, do you know for the month of April, what items saw the biggest increase or saw the biggest decrease? Well, I'm glad you asked, right? Again, no one's ever going to ask you these questions, but hypothetically, I just want to make sure that you are aware just so you can answer these questions. If you can answer the questions, then that means that you know it well enough. For the month of April, we can go down these line items, and these line items are right here. So we saw a 0.3% increase overall, all items. Food, we saw no increase. Food at home, we saw a decrease of 0.2%. And then for, what is this? Food away from home, we saw an increase of 0.3%. And then energy, again, energy, as you guys can see, energy at, there's a few line items, like gas is one of them. During COVID, this was the one that was jumping month over month, really aggressively. So for energy, we saw a 0.3% increase. Let me make sure that it's sometimes hard for even me to read it because it's so small. No, so energy, we saw a 1.1% increase. Energy commodities, we saw a 2.7% increase. We saw an increase for gasoline of 2.8%, so that's the biggest jump so far. And then for fuel oil, we saw an increase of 0.9%. For energy services overall, we saw a decrease of 0.7%. And then electricity, we saw a decrease of 0.1%. This is huge. So for utility piped gas services, we saw a decrease of 2.9%. That's the biggest takeaway. That's the biggest, I would say, reason on why inflation came in so low. So we saw supposedly utility gas pipe services see a drop of nearly 3%. So a 2.9% drop. But then again, for gasoline types, that means gasoline for people like you and I at the pump, we nearly saw a 3% increase. We saw a 2.8% increase to be exact. Then going down these line items. So all items less food and energy. So this is what core inflation is. Just a little heads up, NASDAQ market is dropping, and as NASDAQ market drops, then this thing begins to rise. So I'm okay with adding just even a little bit more. So I'm going to move up my limit order, add more here, and I should be getting filled right around 1019. So again, the more that NASDAQ market drops, the more that SQQQ rises. And remember, I think it's an overreaction. The idea that the market jumps up, that inflation is coming in as expected, the reason that it's jumping up is pretty much because, in my opinion, it's like, holy crap, yes, finally, inflation is not going up. It's actually going down now. But if you think about it, in the past 12 months, being at a 3.5% inflation rate, that's nothing special, right? We've been below 3.5%. In January, we were at, what was that? Like 3.1%. In February of 2024, we were at like 3.2 or 3.4%. It's because in the month of March, we jumped up, that now in the month of April, we gapped down. And there it goes. Beginning to drop. The more that this thing drops, the more that SQQQ rises. Very, very simple, right? And here it goes. I'm not going to overcomplicate it. I'm going to start selling off some of my shares. Shoot, I do not have 25,000 shares. All right, I just have to make sure that I include it during extended hours. And I'm not going to be up very much. I'm still down. Oh, I wasn't aware that I'm still down. Oh, in that case, I might buy a little bit more. Let's see. Let's give it a little bit more time. All right, let's give it a little bit more time. So I wanted to break down these line items. So when it comes down to core inflation, this is what core inflation is made up of. All items less food and energy. So everything that we just talked about up here is not even included in core inflation. But then you can see this stuff is very important because what we pay at the pump is important, right? Americans, when they're paying inflated gas prices, that should be taken into our inflation rate. Food, that should be taken into our inflation rate, but it's not with all items less food and energy. All items less food and energy include commodities, saw a decrease of 0.1%. New vehicles saw a decrease of 0.4%. Used vehicles saw a decrease of 1.4%. Apparel saw a, what is that? Apparel saw an increase of 1.2%. And then when we go down for medical care commodities, increase of 0.4%. Services less energy saw an increase of 0.4%. Shelter increase of 0.4%. Transportation services 0.9% increase. Medical care services 0.4% increase. All right, and that is it. That is everything that is tracked for the month of April for the CPI data report. We talked about overall CPI. We talked about core CPI. And then we talked about the new month that was added for the month of April and the old month that was added for the month of April. Again, the overall expectation was 3.4%. We were previously at 3.5%, and we did drop from 3.4%. But mark my words, they will always try to word this in a very favorable way for the market to go up. So the way that I would expect that all these different news outlets are going to talk about the 3.4% is that inflation is dropping and market sentiment is good. But if you really think of, I mean, technically they are correct. We are dropping from 3.5 to 3.4%. But also technically, if you look at even just the most recent January and February CPI data report, we were at lows of 3.1%. And then 3.2 or 3.3% inflation. Then we jumped up to 3.5. So yes, we have dropped from the most recent month, but we have not made any progress since July. Think about that. Since July of 2023, we're nearly coming up on a year. The inflation rate has not made any progress. And I want to remind you that. Okay? So take all of the good. Yes, inflation is dropping from 3.5 to 3.4%. But we have not made any progress since 3% inflation in the month of June 2023. Okay? Do you know if the Federal Reserve will raise and cut interest rates? First off, no. No one knows, right? Can they be more willing to potentially cut interest rates? There's no idea that the Federal Reserve is going to raise interest rates. The Federal Reserve, we listen to Jerome Powell speak all the time. I host all of these live streams on YouTube. So I've asked you before. I know everyone always asks you guys to subscribe to their YouTube channel. I do upload new videos every single day. And anytime that Jerome Powell speaks, I try to go live because Jerome Powell is the head of the Federal Reserve. And in my opinion, his word, his sentiment is sometimes even more important to our stock market than even if like Joe Biden were to speak. Everyone right now is focused on the Federal Reserve because they are the ones that are in charge if we're going to be raising or cutting interest rates. And the market, the stock market, wants the Federal Reserve to cut interest rates. Because remember, what do you think is the domino effect? When the Federal Reserve cut interest rates, they make it more affordable for people like you and I and businesses to borrow money. If it's more affordable to borrow money, we're more likely to spend more money. If we spend more money, then economies thrive and go up. But if inflation is not going down, which it is, right? It showed that it went from 3.5 to 3.4%. We'll see. Is that enough to change the sentiment for the Federal Reserve that Jerome Powell and his colleagues have a little bit more confidence in cutting interest rates sooner than later? That's been the big concern. Because in 2023, they were talking about that interest rate hikes or interest rate cuts were going to happen early 2024 or within the first Q1 of 2024. Well, we're now in Q2 of 2024. And guess what? There is still no interest rate cuts. So it's even to be expected that the Federal Reserve might not even be able to justify a rate cut until November of 2024. So I just want to remind you that, again, if you want to stay up to date with everything it is that the stock market has to offer, and as well as when Jerome Powell speaks, I do host these live streams for free anytime there's a significant economic report and anytime that you guys get my videos to over 1,000 likes. I also do want to remind you that I do trade live every morning privately with my LPP team. And again, if you're part of LPP, feel free to say what's up in the live chat. I go live with them every morning. So that means that in the next, 45 minutes from right now, right when the market opens, because market opens at 6:30 a.m. Pacific Standard Time or 9:30 a.m. Eastern Standard Time. That's when the market opens. That's when I go live. I go live with them every day, Monday through Friday, when the stock market is open for about 30 minutes to an hour every single day. And again, if you're someone that's really wanting to get into this market, it's not that it's going to make it easier for you. It's not that it's just going to be handed to you. But if you're someone like myself that learns so much better by watching other people do, you will get access to being able to watch me trade live. You see all of my good trades. You see all of my bad trades. But most importantly, you hear my entire thought process behind every trade I take. And for beginners, yes, it is very valuable. But again, it's really up to you. Are you someone that is willing to wake up every morning at market open and tune in? And also, it's not just tuning in, but also putting in the work, showing signs of progress as time goes on and actually learning from your mistakes. That's the big question. But again, if you ever have any questions, feel free to reach out. If you're ready to join LPP, you can either click the second link in the description down below. We will offer you a discount. But also, if you got sent a message from me via Instagram to tune on into the CPI data report, I'm most likely going to follow up, reminding you that if you're not part of LPP, we'll hook you up with a 50% off discount. So if you have any questions, feel free to message me via Instagram or feel free to message me via Discord, which is all linked in the description of this video. But if you're ready to join and you want to watch me trade live as soon as the market opens today, right? Because if you sign up right now, you'll have access to our live trading session within 45 minutes. It's the second link in the description down below. It shows LPP 50% off. It's our biggest discount. It's a one-time payment, lifetime access. And again, I'm not here to convince you to join. I'm here to encourage you if you see value in the way that I break things down and if I make it easier for you to understand. That's the whole point. Work with people that push you to be better. Work with people that make it easier to understand. And that's what I hope that I can be for you, right? You're still going to have to put in a lot of work. You're obviously still going to have to figure or wake up every single morning. But other than that, again, I'm here to show my goods and my bad trades as well. And I hope to see you there. So hopefully I earn your thumbs up. Please consider subscribing. Again, everything is linked in the description of this video. Thank you again for tuning on into my CPI data report live stream. And if you have any questions, please do not hesitate to reach out. So again, as of right now, SQQQ originally gapped down. It began to then indicate signs of reversal as the market possibly could have overreacted. So we'll see if this thing continues to try to rally or if we begin to pull on back, break below EMA and retrace back to previous lows. Appreciate your time. Like always,